Welcome back. You're watching Startup Central. It was in May 2020 that the Prime Minister had said the government would allow startups, unicorns, Indian companies to directly list overseas. In September 2020, you had actually seen an amendment to the Companies Act to permit this. However, the government has not notified it and given the final green signal. This is because also due to tax concerns. Indian companies want exemption from capital gains tax when they transfer the shares of the Indian company to a non-resident company. 24 hours ago, Finance Minister Nirmala Sitharaman on August 17th has said the process is fairly completed. Now, the government has finished the internal homework. So is the government getting ready to announce overseas listing, direct overseas listing? It should be pointed out that even when Nirmala Sitharaman, the finance minister, was talking about this, she also said India has emerged as a haven for fundraising activity. I'm going to be talking about this and more, the pros and cons, particularly with Siddharth Pai from 314 Capital, who's joining us live. Siddharth, it's always a pleasure talking to you. Thank you so much. Since May 2020, the idea was the Indian entrepreneur should get the freedom to list his or her choice, the domicile that is. It hasn't happened as yet. But look at the timing. You've had this blockbuster Zomato listing. You've got a very healthy IPO pipeline from Paytm to Nykaa to Policy Bazaar to delivery and all that. And now, given the healthy pipeline, the government will allow it. How should we read this development?
So Narendra, I think what's happening in the Indian capital markets right now is fantastic. It's actually something that everyone in the investing industry, be it a retail investor or an institutional investor, has been waiting for a long period of time. And I think the government's initiative to actually allow flexibility in terms of the jurisdiction of listing will actually add on to this. I mean, not in any way rob away from the sheen of Indian startups actually choosing to list itself. Because the greater number of options that you have, then it becomes a clear economic choice for the founders, as well as for the board to actually take as to the jurisdiction of listing as well. And there are, and just the way investors have certain niches, there are also various bourses or markets that also have certain niches itself. Whereas the Nasdaq actually heavily rewards and is extremely bullish when it actually comes to SaaS companies, whereas the Indian markets richly reward any sort of consumer companies that are coming on as well. So I think from the perspective of the Indian founder right now, the ability to actually pick and choose the market they want to list in by taking into consideration the pros and cons of that market, how deep it is for that particular vertical, as well as the competition that exists on that market itself, becomes one of the additional points that people can actually calculate. And India will become far richer for this particular part also, because the tax department, being the tax department that it is, will actually ensure that there's very little revenue that will actually end up being lost throughout this entire process. So it becomes a net accretive win-win for everyone that's actually concerned.
So it's the internal homework has been done. Finance Minister says the process is fairly completed. I totally get the argument of being able to access wider capital pools, that investors at NASDAQ or SGX, for example, may be more familiar with biotech or, SaaS, all of that. So Indian startups could get higher valuations or what they feel they should be deserving, etc. But can not another argument be made that if these Indian companies can build in India for the world and do wealth creation in India, that's great news for Indians?
That is, and see, if you look at the profile of the investors in these various startups as well, a majority of the investors in these startups are actually foreign investors by themselves. The Indian investing class has ended up being a mute spectator at worst, and at best a money manager for a large amount of capital that actually comes in these particular companies itself. India doesn't have a strong enough venture capital, domestic rupee capital industry. This is something the industry has been trying to strive for a long period of time also. So from that perspective, the loss that can possibly accrue to India is actually fairly mitigated in that regard. But by enabling and empowering Indian entrepreneurs to actually seek and raise capital globally itself, it actually becomes far better, because you look at it from a perspective of an Indian investor as well. A retail investor is anyone who invests less than 2 lakhs in a particular company. The LRS limit for everyone's about $250,000. So it gives a large enough amount of money for retail investors to actually participate in these particular companies in case you choose to go forward. From a regulatory perspective or tax perspective as well, any Indian investor investing in those companies, or rather any company which actually derives a material amount of its value from Indian operations, will be taxed as an Indian company. All of us are familiar by this because of the precedent set by the Vodafone case that from 2012 onwards. And thankfully, the government has reversed the retrospective aspect of the case, but not the prospective one that actually continues as of now. So it's better for everyone to actually enable these options. And see, most of the entrepreneurs, as we've already seen, are fairly confident of the fact that the brand recognition that they actually enjoy in India will enable them, as well as the depth of the Indian market and the buoyancy that we're seeing in the market of late, will actually enable them to actually start investing, to actually choose to list in India itself. By enabling the option, it doesn't mean that no one's actually going to look at the Sensex or the NSE for that matter. People are going to continue to do so. But the rationale for people to actually flip to either US or a Singapore, because it allows a wider range of listing, will actually go away. And a greater number of our entrepreneurs will choose to remain as India domicile companies and have the headquarters in India rather than flipping abroad and being headquartered in Singapore or the US, whereas the primary market and the founders and the entire team is actually in India.
A last question to you, Siddharth Bhai. The internal homework is done. Process is fairly completed. What has stood in the way of this is also concerns over revenue loss. Investors, founders saying they don't want to pay capital gains tax on the transfer of shares. Now, you and I, as observers of the corridors of power, know that the tax department is usually a little reluctant for losing out on revenue. How can this be structured, which is a win-win for the tax department and for the startup ecosystem?
So I think, Nayata, the most important thing that any entrepreneur in India actually reconciles with is that there is no one who can actually fight the tax department in the country. So I think the 20% capital gains tax that applies as part of this will actually continue to apply for these particular investments also. What the industry has been seeking for a long period of time is to create parity between, at least in this case, is to create parity between the stocks listed on, let's say, a NASDAQ or the NASDAQ or the NYSE, as well as the stocks listed on the NSE and the BSE itself. But the reading that most of the people have actually gotten from the room is that the tax department may not actually agree to this particular point in wholesale itself. What they may look at is a relaxation of some of the surcharges that particularly apply on these kind of transactions that don't actually apply for listing into India itself. That being said, the tax department is going to ensure that their pound of flesh is already taken care of. And so long as revenue's appetite is actually satisfied, the ability for the proposal to go through will actually be there itself. So it is an ask that the entire industry already has, but the industry is fairly confident of the fact that this ask may not be given 100%. But I think the doors that this actually opens in terms of enabling companies to raise from foreign jurisdictions and to actually list over there itself will actually offset some of the tax that may actually come as part of it. So it will involve some amount of structuring. It will involve different thought process from the entrepreneurs. But I don't think we can actually sacrifice, I would say, the aspiration for these companies to invest abroad at the altar of the income tax department itself.
So let's see, the internal homework is done. The process is fairly completed. We're all on standby for this. Thanks a lot, Siddharth Bhai, for joining us. It's always a pleasure talking to you.
Likewise, Nayaka. Thank you.